What is going on, investors? Welcome to my channel. This is Jason, aka the Frugal Investor. Today we are going to do a quick portfolio update, and we are also going to talk about the lawsuit between Apple and Epic Games. Please don't forget to like and subscribe. With that said, let's get right into it. Epic Games is the creator of Fortnite, and they are suing both Apple and Google for taking 30% off of in-app purchases. Basically, any app you download or buy anything from App Store on that app, or any transaction you do in the App Store, Apple takes 15 to 30% from that transaction. Not only that, the app makers are not allowed to send their customers to third-party web pages to pay for their service and then come back and use that service in the app. Apple and Google have a complete control over any transaction in their App Store or in-app purchases. A judge in California passed a ruling against Apple to let developers allow to send customers to a third-party page where they can pay for the services and then come back and use those services in the App Store. Now, this is a great win for Fortnite. The judge did not require Apple to let app makers use their own in-app payment system, one of Epic's top requests, and allowed Apple to continue to charge commission of 15 to 30% for its own in-app payment system. Not only that, South Korea just passed a law allowing third-party developers to access payment systems outside of the App Store to pay for services. Now, this can be a huge loss of revenue for Apple and Google, but is it a huge loss of revenue? Let's look into it. App Store purchases constitute almost 64 billion in 2020 of Apple's revenue. Now, that is almost 20% of their total revenue. In 2021, they are expected to have a total revenue of $360 billion, while in-app purchases will constitute about $68 billion in total revenue out of the 360 billion. Now, there is a high likelihood that these laws may get passed all across the world or even just in United States, Europe, and South Korea, but will it be a huge loss? I do not think so. Even though they constitute 20% of Apple's revenue, Apple can still charge a fees to get the apps listed on their App Store or to have like a separate payment system for the apps, their own payment system, and they can charge fees through that. So they will come out with ways to make money through this, to make monetize this, to not let the loss of revenue continue on, and come up with creative ways to make money through this, in my opinion. In the long term, it will not have a effect at all. In the short term, it can have a small effect. As we can see, the stock is down by almost 3%. Moving on to my portfolio. My portfolio is down this past week by almost 2%. Almost $4,000 is what I'm losing in the red in the past week. A big part of it is due to Apple and Google, which are one of my biggest holdings. And overall, they're down by close to $1,000 for this past week. But over the past month, they are still in plus. So now this is short-term red that I like to see on my portfolio because this is a good buying opportunities for great businesses like Google and Apple. I think Google is still available at a cheap price compared to its competitors. I think Google is a huge, massive business and is still not fairly priced. And this is a great buying opportunity. I like seeing the red on great companies. In my opinion, these are short-term fears, and these short-term fears with Epic and this App Store news will come to pass. And Apple will come out with creative ways. Google will come out with creative ways to move around this and to figure out other ways to generate revenue to cover this loss for themselves. Both of these companies are my biggest holdings, so any short-term news impacts my portfolio, but I am not really worried. This is a great buying opportunity. Now, this past week, it has been a red week for me. The biggest losers being just in this week, real estate being the biggest loser, followed by healthcare, followed by industries, followed by tech, telecom. Now, these are all cyclical industries, so they keep going up and down, and it doesn't really matter. I just keep putting money in. When I see red, I just put money in. I am really not worried. But overall, in the long term, if you look at the 1 month span, in the 1 month span, I'm only red in um, consumers, healthcare. I'm up in real estate, and I'm red in industries, which is Canadian Pacific and 3M. Now these are stable dividend paying companies, and I'm really not worried if I see red in them. But overall, this month we are in a red, and we are in this week we are losing almost $4,000. I just got paid a dividend from Target Corporation for $23.21 and from Johnson & Johnson for $33.83, followed by JEPI for $41.19. So far, for this month, I have gotten almost $100 in dividends just for this month alone, which is not bad. I think I'll get like $150 more just for this month, and which is great. The only companies that I've been buying this month are Facebook, Alibaba, and AbbVie. Now I'll be buying more of Apple and Google after this news, either tomorrow or day after tomorrow. Just last week I was at 186, and right now I'm at 183, so down by almost $3,000. It doesn't really affect much. It goes up and down. That overall we're in the plus. That's the margin of safety. That's the buffer we have. We are in a buffer of almost close to $30,000. That is a great thing to have, investing at the right time, and that gives you that buffer, that margin of safety, that even if the market falls by, let's say, 25% or 30%, I still have this margin of safety to protect me, to protect my principal, basically. That was a quick update on my portfolio, guys. If you like this type of content, please don't forget to like and subscribe. Thank you for watching. This is the Frugal Investor signing out.